Welcome back to the show. You are watching your favorite host, Nambi, and we're gonna be talking about chart patterns. I've been making a series of videos here where I take you guys along my journey of learning technical analysis um, from scratch. Basically, I'm learning to trade options. I'm learning to trade crypto, and what better way than to document the process? So if you like this content, stick around. You might learn something. You might get some value out of this. Let's dive right in. So today, I'm going to be spending a lot of time um, in going over chart patterns, how to tell chart patterns, how to decide, and how to tell what spot them first of all, and then be able to infer from them or gain some type of meaning or reading or information that will help you make profit and take some trades out of the market. A minimum of 10 days between. For me specifically, I plan to spend a lot of time drawing a lot of charts, practicing with a lot of patterns to be able to pick them right off. Now, there's advice is to find one and basically go through multiple charts, 50 to 100 different charts, trying to identify that one particular pattern. There's many, what you really need, from my understanding, is that you need to have patience and be thoughtful and have a wild imaginations. Don't be afraid to test it. Um, don't be afraid to be wrong either. There's no guaranteed or any one specific. Some of these patterns, they're just indicators, and you treat them as such. They're not 100% proof. They're not 100% fail proof. So uh, there are different types. Most patterns employ straight lines, such as triangles, although a few use semicircles or semi-ellipses, such as head and shoulders. Pattern lines generally follow either the highs or the lows. You usually want to organize pattern types according to whether they forecast a continuation or a reversal of the current price action, although you can apply many patterns like triangles either way. Um, we're going to obviously look into some of these patterns graphically. I'm going to pull up, first I'm going to pull up a quiz here that I found online, some literature. We're going to take the quiz together and we'll learn from it. The lingo of pattern analysis, double bottom and dead cat bounce, for example, it might sound funny to the lame ears, but they describe price action efficiently. Once you are able to spot divergence, or you're able to spot specific type of patterns, they predict the price action to a really high percentage. Remember that as with most aspects of technical analysis, a pattern is a work in progress. You need a lot of practice to get good at spotting them. You may think you've seen a pattern developing only to have the price action change course and fail to complete the expected formation. So like I said, be prepared and have a plan to exit your trade if it does not, if it doesn't go in the direction that you're expecting. You may have to erase your work and start all over a number of times on any single set of bars or any time frame. What you need to understand is that pattern identification can be frustrating and time consuming. Resign yourself to making a lot of mistakes, and then understand that even valid patterns fail some of the time, like all indicators. Um, so let's go ahead and I'm going to share my screen here and we'll look at this. We'll look at we'll look at some basic charting patterns, okay? Basic candlestick patterns. What chart pattern is shown below? Look at this from an angle and from the scale of 12 to 14. So we're looking at a chart here. It's a 45-minute chart of the DXY. Clearly here we can see a reversal in price action from an extended downward trend from, I want to say, from a price of 93.7 all the way down. Like there was a support right here at 93.6, and all the way down this thing went to 93. It says about 93, so 0.6 or 60 cents worth of drop. So if we're looking at this chart pattern here, you can clearly see what may look like, well, on several points of this chart, I see certain things, okay? I see different patterns. I want to say like from the 12, let's see here, from this point here, that looks like 1, 2, let's see, what kind of pattern are we seeing here? I think it's important to just like take a quick guess, a quick informed guess, and move right on. I'm gonna go, let's see, basically we have another support line here, down here at the 93.0 mark. And it looks like what looks like a head and shoulders, and which switches into, so this resistance line here is at the 0.343 line. It hit it twice. It hit that resistance point twice and eventually broke it, retested it, and took off. So we might be looking at a bull flag here at the end. But before we got to the bull flag, there was a, well, here are the options. There's an ascending triangle, cup and handle, inverted head and shoulders, double top, triple bottom, triple top, inverted double top, double bottom, inverted triple top. Oh, wait a minute, I may have clicked there. Okay, moving right along. So the next one is, I hope you picked the right one. I just clicked one on accident. I think I was gonna go with a bull triangle. Anyway, this is the second question. This is the second diagram. This is a clear bull flag where you have a markup distribution, markup distribution. You can draw a flag here with this long extended upward candlestick as the pole, and a triangle flag up here with the resistance and the support. So I would call this one an ascending, I don't know. Let's see. Where's the triangle? Ascending triangle? Well, I was gonna call it a bull flag, but it's not one of the options. So I'm gonna go with ascending triangle. All right, here's the third pattern. Third pattern, here we go. All right, so we've got what is clearly a bullish trend with a channel that's formed right here with support at 1.618, which sounds like a fib level. Okay, so I'm gonna go with, here are the options: ascending triangle, cup and handle, inverted head and shoulders, double top, triple bottom, triple top, and so on. So, well, there's one bottom, second bottom, third bottom. So we just have it. I'm gonna go with an ascended triangle again. Here, this pattern is a clear downtrend with a series of lower highs and lower lows. And right at the tail end there, it looks like a double bottom has formed, which is right here. Okay, so we're gonna go with a double bottom. Next pattern. In this pattern, we see a clear reversal of trends from bearish to bullish, but it hasn't quite broken that resistance line. But because it looks like an ascent, there's a clear channel that's formed here. So I would call this a bearish flag, a bear flag, or let's see, there are two bottoms here for sure before it takes off. But so, all right, so what kind of options we have? We have the inverted double top, a double bottom, inverted triple top. There's a triple bottom as well. Inverted head and shoulders. All right. Well, I think this looked more to me like an inverted. So this looks to me more like an inverted triple bottom. Wait a minute, that's not an option. I hate that I'm guessing it. Okay. My best guess, because this is a bearish, this is a bear, a downtrend of inverted to an uptrend, but it still has a lot of room to go because the resistance is, there's another resistance at the top over here. This chart is a 30-minute Forex chart. New Zealand dollar versus Japanese yen. New Zealand dollar, Japanese yen, 30-minute chart. So we're looking at an ascending triangle. I'll take that one. Okay, we're in another Forex chart, a lot of Forex charts here. Dollar Japanese yen on a 4-hour US dollar Japanese yen Forex chart with, see, we've got, this is a cup and handle. Let's see it very clear. Here's a deep markdown and it bounced right off the support and made a series of higher highs and higher lows and hit a resistance, bounced back to the new, that resistance became a support, and then it touched the support line, bounced up and touched it again. So we're looking at a, yeah, cup and handle. I'll go with a cup and handle. Next chart is the DXY, 15-minute dollar currency index, 15-minute chart. What do we have here? Okay, so there's no clear, well, it's this chart's too zoomed in to even tell what the trend is, but there's a clear resistance line and a support line, or multiple resistance and support lines. I have a chart started off with a chart here at the end looks more, what kind of pattern do I see here? Head and shoulders forming. Could it be an inverted head and shoulders? Maybe. With the first shoulder right here, starting off, and then, let's see. Yeah, I'm gonna go with an inverted head and shoulders. Or just the head and shoulders. All right, we've got another chart here, 45 minutes silver. on a Heikin-Ashi candle. Another thing, let's see, what were we looking here? Significant markdown, markup, another markdown. So we're starting to see it right as that downward trend was, downward momentum stopped. It reflected, it bounced off of the support, and we had a series of higher highs and higher lows. Hit a new resistance and a markdown, but the entire way there was some markup, distribution, markdown, distribution, markup, accumulation, and just another downtrend and an uptrend. So we're looking at an upside down head and shoulders here. Part of head and shoulders. This one's a head and shoulders. New Zealand dollar, Japanese yen on a 4-hour chart. Going with the head and shoulders. Oops, clicked on the wrong one. Okay. Downtrend. This is a 4-hour US dollar euro. And this chart is see, markup, markdown, markup, markdown. It's good thing to note here is that the price action does not move in a straight line. It's very clear that we have, let's see, so what chart pattern are you seeing here? This is interesting because, they said you need a lot of patience to spot these chart patterns, but my gosh, so much patience. But I just see a bunch of squiggly lines at this point. I can't make any sense out of it. It's frustrating me. I wish I could just look at this really cool shapes that they describe here. I'm supposed to see ascending triangle, cup and handle, inverted head and shoulders, double top, triple bottom, descending triangle, triple top, inverted double top, double bottom, inverted triple top, inverted cup and handle. And all I can see here is a descending chart with a series of lower lows and higher lows. A series of lower highs and lower lows. Okay. I can't see anything else. So I'm gonna just go to that one. All right, my score is 40%. Woo! Woo! I don't care. It's a first attempt at it, okay? Now let's go over the review. Maybe we can learn something. That was excruciating going through that, trying to figure out, see patterns when it could make sense out of it. All right. So the first chart here is called a triple bottom. A triple bottom here on this US dollar index. It's a 45-minute chart. And we have a support at 93.1. And just looking at that support, there's the first bounce, and there's the second bottom, and the third bottom. And that, my friends, is what you call a triple bottom. And as we can see, the triple bottom is a bullish chart pattern because the immediate price action is a rally. I want to say started at 93.3 all the way up to 93%, like a 40-cent rally. So keep that in mind, folks, that whenever you spot a triple bottom, the immediate price action is most likely going to be bullish. So you want to spot your resistance line and set an alert right here at 343, so that whenever there's a penetration in the line and it retests, and your best entry is at retest on this support line, and then you can take your money. Take your money, okay? All right, the next chart coming right up. Is wait a minute. Oh, they're going into details to describe to us why that chart is a triple bottom, which is cool. All right, this tool is actually more comprehensive than I give it credit for. You can clearly see the price action there on a downward sell-off, and then it hit a point of resistance at the same price point 3 times, and each time reflecting to create a triple bottom chart pattern. Like I said, the next price action after a triple bottom chart pattern is bullish. All right, so the next chart that we went over, we were right. It was an ascendant triangle. Give it up to yourself. Ascendant triangle. I mean, this is one of the easiest one, but I'm so proud of myself for getting it, because an ascendant triangle is a bullish chart pattern that's it's comprised of a rally, a long rally, a period of accumulation, and distribution, another rally, and another period of distribution. So you can see that ascending triangle form right there at the resistance, with the base, with the apex right at the resistance and the base of the triangle of resistance, and the bottom of that triangle on the bullish candle. Okay, so we were right about that, and it actually goes into further details to describe it, how ascendant triangles are formed, because if you can draw a triangle with the base at that they say also you can draw the chart pattern right here at the base at that long candle, long double candle, bullish candle, and the apex right at the resistance, and you can see it forms a channel there. The best place to place your entry will be right at the point where it breaks or penetrates that triangle, retest, make your entry, set your stop profit or stop, your take profit. All right, coming right along. The next chart here is the Euro SGD. I don't trade Forex, so I don't know these freaking currencies. This is a 45-minute chart. And I thought this chart was a bull flag, but there wasn't bull flag as an option here, but they called it a triple top. Ladies and gentlemen, put your hands together for what we now know as the triple chart pattern, okay? And this chart on a 45-minute Euro SGD chart is characterized by that long period of price rally meeting a resistance, and there's an attempt by price action to break that resistance 3 times, and it was bounced right off of it. So you can draw a pattern right there from the topmost part of the triangle with the base at the top at the price rally, and the apex right at the resistance. So this here, ladies and gentlemen, is what you call a triple top chart pattern. Okay, I think the best way to get these things is to first understand how to draw your trend line, and then followed by marking your levels of support and resistance. Once you're able to get your levels of support and resistance, it becomes slightly easier to spot these charts. Now, whenever you have a triple top, the following chart pattern is bearish because it shows that the bears were able to establish a solid price that the sellers are not able to. Well, the seller set a hard price that the buyers could not break. You know, how the price market or the price chart is a chart of human psychology. The human beings involved in the market trading this currency pairs, they've tried multiple times to go beyond this price for the specific currency that they're purchasing, but the buyers were not willing to pay any more than that price. So what you have is a surplus of the currency and an immediate markdown in price, because what happens is when you have when you have sellers with a bunch of currency, a bunch of assets or securities, and they can't get rid of it, so you have surplus and an ensuing price reduction because they're going to try to get rid of those securities as quickly as possible. So you have a huge markdown or a huge sell-off. No one wants to be caught holding the bag. So you have a really a rally in the downward direction to try to find a cheaper or suitable price for that currency. Okay, moving right along. The next chart here is the 1 hour Euro Japanese yen. It's clearly a bearish chart pattern. At the bottom here is what seems to be a hard support at the same price. And this chart makes two attempts at that support and gets bounced off. I would call this a double bottom, but let's see what they decided it was. Yep, we were right. It's a double bottom. So you're start to get the hang of it. The more you look at these charts, it start getting easier and easier to spot them. Notice that as we're reviewing these charts, is some of these patterns that were hiding in plain sight are starting to reveal themselves. So we're going to keep moving on. We're moving on to the next chart. Although it's hard to spot that double bottom, you kind of have to be patient and be imaginative. Once you've practiced, you know what the pattern looks like. It's best for beginners to pick one pattern and look for that one particular pattern in multiple charts. Get used to spotting that pattern before you move on to the next. Because there are a lot of patterns out there, and you're never going to, it doesn't make any sense to try to memorize all of them. And like I said, these patterns are not 100% fail proof because they're just an indicator. It's one tool in an arsenal. You get the chart pattern. It's very clear here from this explanation that double bottoms are a bullish chart pattern because the immediate price action is bullish right after that, after double bottom. So get used to them, pick one and keep moving. So the next one we have here is an ascendant triangle. This is a 30-minute New Zealand dollar Japanese yen chart. I think this is one of the easiest ones to spot. You clearly have a support that turned into a resistance, and the price action made a series of higher highs and higher lows to get to that resistance line, forming a triangle with the base at this price, price marked down as the base, this long bearish series of bearish candles. Okay, and that's what you call an ascending triangle. An ascending triangle, ladies and gentlemen. All right, moving right along, the next chart we have here is a 4-hour US dollar Japanese yen chart. The 4-hour chart usually is for swing traders. Let me kind of go over, you know what, let's stay on this point. The difference between the different time frames in the chart. If you use the 5-minute, the 1 minute and the 5-minute chart, you're looking for a quick scalping, a quick trade. If you use the 1 to 4-hour chart, that's for overnight swing trades. When you look at daily to weekly charts, you're now looking at leaps and months out. Those are swing trades. So that'll give you an idea the different types of charts to look at. So when you're trying, it just depends on what kind of trader you are and what goal you're trying to achieve when you enter the market. That will influence what time frame of chart that you use. This chart that we're looking at here, we had it as the cup and handle. I don't think that it's okay. We had it as a cup, but it turned out to be an inverted head and shoulder. And now that they point out that it's an inverted head and shoulder, it's actually very clear and I can see it. Now, keep in mind that these charts don't have to be in a perfectly horizontal or 90-degree line. Sometimes they can be in diagonal form. They can be like trending in a diagonal angle. But you can see here, right here, that there was a previous resistance, and after price action failed to break that resistance, it dropped to a lower price point and forming the first shoulder. And then there was an immediate bounce off of that new support line back to the original resistance line, and tried multiple times to break past that resistance line and failed. So you had a massive rally to the downward side with a series of lower highs and lower lows, marking a significant bearish rally. And then we formed a new support. From that new support, price action bounced off of it to a new, well, actually it bounced right off, broke into, I think this is probably was a resistance at some point. I can't see the previous chart, an old zoomed out chart, but this had to be like some type of resistance because it then became a support. And on that support, we found we had an outdrawn period of distribution with newer lows formed that matched the previous neckline. So we have a neckline here that was formed. So you had 2 shoulders and 1 head. So you have an inverted head and shoulders. An inverted head and shoulders pattern is, what is it? Looks like a bullish chart pattern. Okay. Because then you notice that the pattern, there was a series of higher highs and higher lows before we fell right back to the, so it broke through that resistance and then became that resistance became a support. So whenever you see an inverted head and shoulders, then the reversal price action is going to be bullish. So keep that in mind. All right, next chart is a US dollar currency 15-minute chart. This chart is a cup and handle. Cup and handles can be a bit difficult to spot, especially with a chart that looks like this. But the harder that I look at it, I can see that significant rounded bottom right here from this price rally up to the resistance line and a bounce to the downside. There's clearly a rounded bottom here and a immediate long bullish candle, a distribution, another long bullish candle that bounces off the resistance, drops down to a newer low before it rallies up again to the previous resistance. So we're looking at the cup right here and a handle. Now, a cup and handle is, as we can see, a very bullish chart pattern, because it's right after that bullish chart pattern, we find a enough momentum to break through that resistance to a newer all-time high. Yeah, like I said, this is one of those tricky chart patterns, because even within that cup and handle, you can spot other patterns. At least I can. Right here, you can spot what looks like a head and shoulders pattern with support, a resistance neckline, and a new and a higher resistance point in the middle. So, you know, cup and handle, if you find a clean one, good for you, but just know those are one of the tough ones to spot. So the next chart pattern here is silver, foreign currency.com, Heikin-Ashi, silver 45 currency.com, Heikin-Ashi chart. It's a 1 minute chart. And this chart pattern is a head and shoulders. It's always tricky that the moment that they call out what kind of chart pattern it is, it becomes immediately obvious. But before that, you can just stare at this darn thing for a while and not even see it. Because now, granted, there's multiple head and shoulders on this damn chart. Which one are we talking about here, people? Which one are we talking about? There's multiple heads and shoulders here. There's the left shoulder, there's what looks like a neckline, there's a head, and there's another shoulder. That's the first one that stops right at the 17th of, I think that's August, 17th of August date. Then it looks like, and matter of fact, that was an inverted head and shoulders, which moves right into an upright head and shoulders, and then an ascending, I don't know, like ascendant channel over here. So if this is a head and shoulders, let's look at how that's formed. It's formed because they took the time to draw your trend lines. Like I said, you must draw your trend lines. When you draw your trend lines, then you're able to see, if it's a channel, you can see a clear resistance and support line. And here you can find that there's the price action is moving in that price channel and in an uptrend. So forming three peaks that bounce off that resistance line to form a head and shoulders. Okay, so this particular chart is very dependent on you being able to draw the trend lines and establish a channel. Okay, like we said in the previous charts that we identified, a head and shoulders is a head and shoulders is a, come on, remind me guys, what do you think, what is a head and shoulders? Is it bullish or bearish? Is a head and shoulders bullish or bearish? What is it? You tell me. Okay, bullish or bearish? Bullish or bearish? Bullish or bearish? So anyway, let's go ahead and just wrap the, okay, the final chart here, final one. This one was kind of a tricky one for me because it's just a straight bearish, ugly looking, money spilling all over the road type of chart, okay? This is a 4-hour USD Euro chart, and it's a descending triangle. Yeah, it better be descending because it's descending down the abyss over here. There's clearly a support that it found, and it's a descending triangle. So once again, this is one of those charts that require you to draw a channel. You're going to have to draw the support and the resistance line and you can watch the price action go in, bounce in between that support and resistance line all the way down. This is one of those pretty charts that don't actually break the channel. I'm expecting that this is going to be a bearish chart. Um, Now, given it, I mean, there's no guarantee that it's not going to break to the upside, but this is a bearish chart nonetheless. All right, ladies and gentlemen, I hope that I've been able to bring you guys some value with this video. We're gonna keep running into different charts in the future. I'm gonna be practicing with some charts to get good at spotting them. If you enjoy this content, like the video, leave a comment in the comment section. Subscribe to the channel. I'm gonna keep bringing you more and more of this type of content. And until next time, peace.